Got some live questions that came in. Mark says, given NVIDIA has been trading range bound for the last month, would Iron Condors be more appropriate for trades in the next month? Well, that's a tough question, Mark. Let's take a step back here. I had a conversation on NVIDIA during a coaching session this week. I also had a conversation on Netflix. A gentleman that was in an Iron Condor on Netflix that was coming up to expiration today, if I'm not mistaken, and what to do. So let's just take a look first. Here's what I'm going to do. We're going to take a look at NVIDIA. I haven't been following NVIDIA, Mark, directly. But let's go ahead and go to NVIDIA, and I'm going to go to quotes. This is going to take me to the stock research page, which shows me all of the available information that we have on the stock itself. NVIDIA currently is at 117, down 83 cents today. As Mark mentioned, a nice mild movement down of about less than 1%. Now, I'm going to link to our charts, and I'm going to go to big charts. This is typically what I use. I have it set up a certain way. And what Mark is saying is pretty accurate, isn't it? Now, in the last... I'm sorry, folks. Let me talk about some of this criteria I have set here. I'm looking at a 3-month chart. That's how I have my big chart set up. I'm using the Bollinger Bands, which helps me sort of identify certain things, such as Bollinger Band breakouts. This doesn't look like a true, what I'm looking at back here, this doesn't look like a true Bollinger Band breakout. It broke out above the upper band, but then closed below it. We typically look for a stock with a Bollinger Band breakout. I want it to, oh, sorry, that was too big. I want it to break above the Bollinger Band and then close above it the next day. That typically leads to stocks that move up, maybe pull back a little bit, but tend to go up this way. Let me jot this down here. That's a default search we actually have for long calls and long puts, looking for stocks that break below the lower Bollinger Band or above the upper band. In this same case, why I have this set up, Mark, is that I'm not seeing a true Bollinger Band negative breakout either. We had this huge drop here from 145 down to 115. This must have been the earnings. I'm assuming this was the earnings. We'll check that later. But in this case, the stock dropped below suddenly the lower Bollinger Band, but it didn't close the next day below it. It dropped again here, but it did not close the next day below it. The first real, and we never really see a true Bollinger Band breakout to the bottom, but we have this stiff decline. Of course, we're going to look at MACD in a moment as well and see if there were any indicators of when this chart movement. Since this decline, which was market bound, and of course, NVIDIA is one of the Mag 7 marks, so it's dragging everything down with it. It has some influence on the market. But just like a lot of stocks in the last 8 or 10 days, we've hit this mild point where we have the stock kind of covered back down from this lower Bollinger Band range, caught back up to the SMA 20, but is just hanging around here in this 115 to 120 range. Okay, so that's what's Mark asking. We're looking at the stock chart and we're asking ourselves, is now a good time where it see its range bound? And in addition to that, of course, what do we also see? The Bollinger Band range. The range of the Bollinger Band we see here is kind of tight. And then it opened up wide to the upper and lower band, the gray lines. It opened up wide with that decline. And then it sort of tried to tighten again, but this drop really extended it. So it tried to tighten up and it came back here and then it dropped back down. And now what do we see? We're in a tighter range of the Bollinger Bands. We were pretty tight here, but the market, I think, depression, the market activity drove it down. Now, underneath of that, what do I have? What is this blue and red line that we're seeing? What I'm looking at, Mark, here is that when we were here in this other range-bound area, but it was a wider range, obviously, 145 to 130, the MACD was sort of trying to find, it was bullish, but then we had a negative MACD crossover here, we had a positive MACD crossover here, and then another negative. It was trying to figure its way out, and again, this whole gap was likely due to earnings. Positive MACD crossover here with the stock approaching the SMA 20, and we had a nice run of 130 back to 140. And then here, as it starts to pull back, it drops below the SMA 20. Now we're seeing that negative MACD crossover. This was, I could almost, not likely, but I could overlay the SP chart on this with MACD and it would look very similar. And then we had the decline. Now we've had that positive MACD crossover again. Usually what I look for when doing income methods on my married puts, this was a positive signal in the market. I looked for an SPY, which didn't actually materialize, but I did open new bull puts this week. With the hesitation that came down and the market sort of stabilizing. But today was a little bit hectic. Not hectic, I should say, but a little bit confusing. And here's where we are. Bollinger Band range getting tighter. If you're using stochastics, if you're using other things, you're seeing the same things. This range bound is getting tighter. We have a positive MACD, but it's not raging, right? It's not sailing up where the blue line, the 12 and 26 MACD, is really exceeding the EMA 9. We're not above the divergence line, but we're seeing a gradual increase back from this heavy decline from 140 down to 105. And we're back in that halfway range. So your question, would Iron Condors be more appropriate for trades in the next month on this stock? I am always hesitant to recommend Iron Condors on any of the Mag 7 stocks or any of the stocks that have a high beta. Let's go back to the stock details. Does NVDA have a high beta? What is beta? Beta is related to the stock's movement compared to the movement over the same time frame of the S&P 500. This is at 1.75, which means if the market pulls back a point, we're going to, or 1%, my apologies, Mark. If we see the QQQ, let's say NASDAQ, I should say, NDX or QQQ, pull back 1%, we'd expect NVIDIA to drop 1.75%. Okay, so that's not maybe too bad for an Iron Condor. We're going wide wings out. We're going to show the Iron Condor in a moment, what you might look for and what you would consider. But this is a pretty high beta, almost close to 2. It's going to move twice as much of the market. And then this type of, again, we saw this in 2020. We saw this back in 2018. We saw this in 2022 with the interest rates, with a news-driven market. Based on the reports coming out of the economy, we just crossed the interest rates. We know what Powell is not planning on doing for the next couple of months. We know we have that new series of earnings coming up in the next 2 to 3 weeks. That being said, we know NVIDIA's is not coming out till May. So into April, we might be okay. But what if AMD should be around the same time, SMCI should be around the same time as NVIDIA, Mark? So, but if something comes out in early April before the expiration date of the 1 month out Iron Condor, and it's negative or it's positive, NVIDIA is going to react with that. The whole semiconductor AI market is going to react with that. So it's something to be cognizant of, something you want to pay attention to. The other sectors or industries, now your sector industry, my apologies, Mark, they could relate to that. All right. What do I look for in an Iron Condor, and what is an Iron Condor? Well, first off, I don't have it on my tabs. So let's go to other strategies. I'm going to go ahead and add Iron Condor, of course, to our available strategies. My apologies. There we go. Let's save configuration. For those of you that don't know, an Iron Condor is a combination of 2 credit spreads. A bull put credit spread, which I'm going to sell a put that's out of the money. Typically, I'm going to look for an 80 or 85% probability the stock's going to be trading above that strike price in the next 14, 20, or 30 days, whether it's weekly, whether it's monthly. You might even be using daily, but, you know, 0 data expiration spreads, I haven't had a lot of luck with. And then, of course, we're going to buy a put below that strike price. We're going to get a net credit for this transaction, and the risk is limited to the difference in strike prices minus that net credit. At the same time, I'm going to open a bear call credit spread. I'm going to sell a call above the current stock price that's out of the money with an 80 or 85% probability of staying below that strike and buying a higher strike. So I'm not in a naked call. If I just sold the put and sold the call, we'd be in a short strangle position, which has unlimited risk to the upside and high risk to the downside. Here we're cutting that risk by adding the wings, just as you would in a credit spread, and we have the Iron Condor position. As Mark mentioned, and looking at the chart, how it's going into that range-bound pattern, The Iron Condor is a complete neutral position. You want the stock to stay between the short put and the short call strike price. So all 4 options expire worthless. You keep the net credit, and we've got a great trade. Now, I'm going to go to the search by symbol tool since we're talking about NVDA. And we're going to keep, I'm going to keep the strike difference. I almost want to go 2. I almost want to go to $2 or $1 strikes, I think, with NVDA. Now, let's go to the 2.5 to 5 mark. Let's keep it simple. We're just going to go to standard April expiration, 27 days out, because you asked for the next month. Now, I would likely probably do a 2-week out, just like I do with my bull puts. Maybe I'd use a 1-week or a 2-week out now that the market seems to stabilize. We don't know what news is going to come out this weekend, but let's take a look at the monthly expiration. And I'm going to go more results. Let's see what we've got here. Hopefully I have my criteria selected. I don't have the full criteria selected that I want. I do have it, but it's in the plus sign. What I would typically look for here, here's our basic view of the options prices, the strikes that we would use. Okay, so April 17th expiration, 85 to 90 on the bull put side. So I'd sell the 90 put, buy the 85. Sell the 145 call, buy the 150, but that's only a 3.2% return. I'm probably going to be closer in this range. And what I want to see here, let me add this. So the column view here, I want the probability above the short put strike price, as I mentioned, to be above 85. That one's a little bit high. I want the probability below the short call strike price. That's right in the wheelhouse that I want. And this was with the 130 on the short call strike with a 19.6% return. That's actually pretty strong. But this is using the 90.95 with the stock at 117. And I'm sorry, the 130, 135. I think I want to use the 130, 135 strikes, but I want to compare it. I want to use this one. I want to use the 100 and the 105 puts. Why am I selecting these strikes? It's just in my mind, when we went back to the chart, the stock just touched 105 in that big decline, but it hasn't breached that recently in 3 months. Support and resistance, of course. And the 130, risky. I'll admit that. If NVIDIA starts to take off, maybe the 135, 140 is a better option. But we're going to use the 130, 135, as I mentioned, with the stock now at 117. We are going a month out, so a lot can happen in a month. We're not seeing it here in the search by symbol. That's okay. We're going to build it on the fly. 100, 105, 130, 135. Let's go to custom spreads. NVDA. We're going to use standard April expiration. I do, again, mention that I probably would be using 14 days out, maybe 21 days. But we're going to go to the April expiration, the monthly trade. And I want that 105, 100. And we're going to move that up to the 130, 135. So this is my bear call here. I'm going to sell the 130, buy the 135. Sell the 105 put, buy the 100. Looking at support and resistance, again, I really think the 135, 140 might be a safer bet. That's not a recommendation or suggestion, just by what we looked at the chart. But let's take a look at this. We're just going to use the midpoint prices. Yeah, 132.25. Get a net credit of 127. Okay, we've got 5-point spreads on the position. We can only lose on one side or the other. It's a 5-point spread, but if we're collecting 127, the maximum risk is only 373. We're looking at a 34% return on the position. Again, if the stock stays above 105 and below 130, excuse me. And we saw the probability ranges. We took the 105, 100, which is probably around that 85 probability, and we took the 80 probability of the 130 and 135 as well. Now, once again, in that steep decline, we see the stock didn't breach NVIDIA, didn't breach below 105. We're seeing a positive MACD crossover, and we're seeing this sort of stagnation in this period. right now. It's trying to push above the SMA 20. That Bollinger Band is getting tighter. We've got the positive MACD. But all of this has been on a relatively low volume. Now, the big volume here, of course, on that, I'm assuming was that earnings date. Where are we at? Yeah. This was January. Oh, no, this was January 25th or 26th with the new confirmed earnings coming at 5. It would have been February 28th or 26th when that earnings came out. So this big drop was probably the last earnings. That 135 down to 120, that was probably the last earnings. And this was some other event, I'm thinking, Mark. We'll take a look at that in just a moment. But in any case, we're starting to go in. It's starting to meander. Is this a time for an Iron Condor? Pros and cons on the position. We've got a nice, essentially 3-to-1 risk-reward ratio here, meaning that the potential profit, if the stock was in this range, between 103.73 to 131.27 within the next 27 days, currently at 117. So it's a good brace to the upside, good brace to the downside. Well, that's the break even, not where the short strikes are, but that's the break even. And we could make, if it stays within that range, I apologize, of 130 to 105, we could make 127 for only risking 373, 34% return, as I mentioned, 3-to-1 risk-reward ratio. Not too bad. We have the good probabilities on our side, even with the last decline. Now, we saw that earnings aren't coming out until 5/28. That's not something that's going to cause the stock to fluctuate wildly. We're avoiding that. This position will close before that. But this, again, is what? It's a good, strong position. We've got good probabilities in the 80% range. The stock will stay above 105 and stay below 130. However, this market has been kind of chaotic. We're settling down now after a big pullback, after a big reset. Am I saying that I'm expecting the market to go back to where it was 2 months ago and that everything will cover NVIDIA will be back to 140? That's not exactly what I'm saying at all. What I'm saying, the risk inherent in a neutral strategy when the VIX, the volatility across the market is still elevated. I think we're in the 19% range. Went up to 21 today, pulled back down to about 19. NVIDIA, if the market recovers strong, remember the beta, 1.75. This was going to move almost twice as much as the broad-based ETF and indexes. SPY, SPX, NDX, QQQ, IWM, for example. We have that higher beta. So you're going to expect it to move. It was a 1.75, almost 2 times as much as the movement. So if you have a good 2 or 3% movement on the stock, I'm sorry, on the broad-based indexes or on NASDAQ, has a good 3% day, this might move up as much as 6%. But you're still okay. Only $7 or $8. That's going to put us about at, 125, which is within 5 points of that 130 strike. Those are some of the things you want to consider. Range bound in the last month was your question, Mark. I would say I'm not necessarily saying it's range bound in the last month. I'm saying it's range bound within the last 12 to 15 days. Yeah, we can call it a month, since March, where we go. Let's call it right here. This is what we're going to call the range bound. I'm going to start that point there. So we're starting at about March 12th. So about 9 days. Yeah, 9 to 10 days. I'd call it range bound. This was still not range bound. This was strong decline. This is range bound in the last 9 or 10 days. That's what I'm seeing. Is that enough indication? Well, of course, naturally, we can't trade today, Mark, and we're not going to trade today. But what I'm saying is wait till Monday, because we've seen in the past couple of weeks things coming out over the weekend, whether it's economic factors, whether it's global strife, whether it's other concepts, economic concepts globally or in the U.S. itself, that have caused the market to fluctuate at the Monday open. Personally, I would say on Monday, and I cannot give direct trading advice, but on NVIDIA itself and the market, if I see NVIDIA break above the SMA 20, this continues on this sort of slow trend upwards, and we see the Bollinger Band constrict a little bit more, Mark, I might consider it. But in this market, 30 days is a long time. When we know we have a lot of the big earnings coming up in April, even though NVDA, and we're assuming that AMD, which is not one of the Mag 7s, but other stocks in the sector industry and the Mag 7 stocks. What's Apple's earnings? I think it's March 14th. Am I not mistaken? May. I apologize, folks. May 14th. What's Apple's? May 1st. Okay, so that one's the May 1st. It's unconfirmed, but it's going to be around May 1st or May 2nd. Still after the April expiration. That's fine. I keep mentioning AMD. Let's just check what is AMD's earnings. It's going to be right around the same time as NVIDIA's, I'm sure, 5-6. Okay, so unconfirmed again. But if we have retail coming up, let's check Costco or TGT, Target. Are they in April? No, they're 521. Fantastic. Okay. Let's just look at A or Alcoa. 528. Okay. Agilent. I want to go AA. Is AA still Alcoa, folks? I always forget. Yeah. 423. Okay. So still probably past that expiration date we talked about, and perfectly fine. We're at April 17th is that discussion there for the expiration date. But some big earnings are going to come out. Again, I can't give direct trading advice. I see what you're talking about, seeing range bound. We know what we've just come out of with this recent market trend, with the recent concerns in the market. Let's wait we have to, Mark, but let's wait until Monday. I'd like to see more of a movement up here, maybe a little bit more constriction on the Bollinger Bands, and a continuation of this. If we gap up 5 or 6% on Monday, I'm going to hesitate to say a neutral strategy such as a butterfly or an Iron Condor would be a good idea to trade, because now the market's showing strength. If we gap back down 2 or 3%, I'm still going to be hesitant to say the Iron Condor or the Iron Butterfly, especially a short strangle position where the risk is open to the downside and to the upside, might not be the best position. We start seeing more volatility. We start seeing more flux on Monday. Might want to do the opposite, looking at long strangles, long straddles, buying even though the volatility is high. If volatility rears up again and we see a large spike one direction or the other on Monday as well. Of course, when we see a bullish spike of 3 to 5%, that might be a positive indicator. But again, I'm not sure if it's still in the construct, still in the wheelhouse of what I'd want to see for those neutral strategies of the butterflies, for the condors, or for the short strangles for that matter, or short straddles.